But let's make sense of what's really happening across the globe. We've got James Knightley joining in on the show right now. James, hi. Evening to you. Morning here, though. But just wanted to understand, the truth behind the fears of yet another round of yen carry trade after Japan's finance minister hinting that there could be a round of rate hikes now coming in.
Yeah, I mean, we are seeing this divergence in central banks coming through, and there'd been for a long time this expectation that Japan would hike, and they caught markets a little bit by surprise in August of last year, and they are perhaps coming back and again suggesting that they can do more. And of course, you've got a Federal Reserve in the United States where markets are increasingly of the view that the Fed will cut less and less than previously thought. The strong growth stories there, inflation's somewhat stickier as well, and the Federal Reserve themselves are suggesting that with policy, the fiscal policy side remaining very loose, monetary policy may need to be tighter to offset that support if they're going to be serious about keeping inflation. And at the same time, you've then got the European central banks, which are continuing or expected to continue cutting rates pretty aggressively. So you've got this quite interesting divergence coming through that's adding to a little bit more volatility now in markets.
James, this entire chatter of yen carry trade getting challenged as Japan would increase rates, and that is something which in a sense could have a impact on the global risk on setup. Is that true? Is that a real fear?
I'm not sure it is, to be honest. There was that surprise rate hike that we got in the summer of 2024, which did cause some disruption. That was at a time when the Federal Reserve was also shifting or changing its tune on the possibility of more aggressive rate cuts coming through. So we saw moves coming from both Japan's side and the US side, and that caught markets globally a little bit by surprise. Now that Japan has started its rate hike cycle, I think there's less of a surprise factor coming through, and we know that the US is probably going to be cutting rates only very cautiously as well. So yeah, we saw a bit of a move, but is it going to be of the same sort of scale that we saw last year? I don't really think so. I think we'll get a bit of calm returning quite soon.
What will peak out first? Will it be the dollar index or will it be the pessimism in emerging markets?
Sorry, can you repeat the question? You just cut out a moment.
What will peak out? Do you think will it be this pessimism in emerging market which will peak out ahead of the dollar peaking out? Because either emerging markets have to stop falling or dollar has to stop rising.
Well, I think we have to look at why is the reason that the US dollar is doing so well. And, we keep hearing this case of US exceptionalism. And amongst developed markets, the US does really stand out. The clarity that a clean election outcome has provided is incentivizing companies that have perhaps been sat on the sidelines, fearing election uncertainty, fearing regulatory and tax uncertainty. Well, now they've got real clarity. And those that have been sort of holding back may start to put money to work. So that's a positive story for US growth, which should be dollar supportive. At the same time, inflation is sticky and concerns about tariffs and trade protectionism I expect it to be a dollar positive story. We saw that in the last 24 hours with Donald Trump reasserting that tariffs are going to be a key policy shift, and the dollar regaining some of the lost ground that it has made. And of course, geopolitical uncertainty as well. What goes on in Ukraine, what happens with Taiwan and China, those factors are all going to remain very much in play for much of this year. So those factors are all supporting the dollar, and I personally would think that the strong dollar story is going to remain a key theme for this year, and it's largely coming from the US side of the equation.
James, on that note, we'll let you go. Appreciate you making time and speaking with us this morning.
If you like this video, then like, share and subscribe to ET Now.